And this is why I'm so bullish on Strive. They have no debt. They have 16,000 coins. They now are the first security ever to offer daily dividends, which they're stripping away all the volatility. This is definitely going to get a lot of attention because who doesn't want cash on the daily, right? Saylor is like a very underrated marketing expert. I think he knows social media like no one else I've ever seen. And mind you, like I have a strong background in marketing. I, did lots of marketing internships. I have a master's in marketing. And this guy knows what he's doing. And I think he intentionally will come out and say something quote unquote outlandish to get people chatting. And I think the team knows what they're doing, and it's either you trust them or you don't. If you don't trust them, don't invest. It's that simple. We're struggling financially in the US from anywhere from my generation to my grandmother's generation. And I think these products are really good for that older generation with a shorter time horizon. For me, I'm 24 years old. Like I really have no business buying SATA and Stretch. Like I'm just trying to put as much money as I can into MSTR, Bitcoin, and ESST. I definitely think there's room for more products in the US.
Hey everybody, Tyler Rowe here with the BitcoinTreasuries.net podcast. Today I'm joined by Halston Valencia of the Daily Stack podcast and Bitcoin Quant. Welcome to the show, Halston.
Thanks. Excited to be here today.
Yeah, really excited to have this conversation. Love the analysis and the work you're doing in the Bitcoin Treasury space. It's been fun to watch, and in this space, there's never a dull moment. I think as we're recording this, Strive is having a crazy week. 4 straight days of setting a record with their SATA digital credit product. Are you feeling bullish on Strive right now, Halston?
I am feeling pretty bullish on Strive. I'll start by saying I really like the Strive team. I've met probably a good 8 to 10 people on their team in person at conferences. I follow all of them on socials, and I don't know, I really like management there. I really like how transparent and honest they are, and I'm pretty bullish on Strive, especially with them moving to daily dividends with SATA. I'm pretty bullish on that, and I think, there's been some call-outs and maybe a couple flaws with Stretch as of late. So definitely feeling very bullish. I still am a proponent of Stretch and MSTR, but definitely I like to see the Strive guys succeed.
Absolutely, yeah. They've got a great team there, and very capable and fun people as well, which is always a great combination with any company. So it looks like they're having fun,
Yes.
and it's fun to be having fun when you're winning like they are. Their SATA product traded a couple $100 million this week. I mean, it's just kind of mind-boggling. I knew it would be a big month after, like you said, the announcement of the daily dividends, but how do you think daily dividends does change the game? We're probably not going to see, month-end accumulation like this anymore because people are racing in before the ex-dividend date, but how does it structurally change the game for SATA moving forward, Halston?
Yeah, I mean, I think what they're trying to solve is the volatility with the ARB and the traders. I think we definitely are seeing that with Stretch. I saw a good tweet, I think it was either this morning or yesterday, that got put out about the flaw with Stretch and strategy specifically is that they're using the VWAP as one of their main metrics, which is a little bit dishonest because it takes the weighted average of like their best day. So it's not like a true metric to the health of the product. Whereas with SATA now moving to daily dividends, they're able to actually kind of honestly compress volatility almost altogether. And so I think that this, and when you're saying, institution or someone with a lot of capital and looking to put it into an instrument like that, you're looking for something that's healthy and not super volatile. And I think SATA is going to be that exact product. I mean, I'm looking here at, let's see, at the summary for today. Yeah, so today it's 2 p.m. Eastern. Stretch has been 172 million in volume just today. And SATA's at 104 million. So I think that's pretty telling. Mind you, Strategy has 43,000 coins around there.
Mm-hmm.
And Strive is at I think 15 or 16,000. So like that's a huge difference. And the fact that their perpetual preferred is doing, trading volume like not too far behind um Strategy's perpetual preferred stretch, that's pretty incredible. And so yeah, safe to say I'm pretty bullish on Strive. I saw another tweet the other day that said um strategy will be the most like strategy will be the wealthiest company, but Strive will be like they'll grow the fastest or something like that. And I think that's definitely true. We're seeing a lot of growth at Strive.
Yeah, absolutely. It's been fun to watch that and see what Matt Cole, Jeff Walton, and the whole team there have been doing. And like you said, to see the volume on SATA so close to stretch when you've got stretch, which is a 10 billion plus instrument in notional value, and I think Strive, last I checked, was like 5 or 6% of that, and gaining, closing that gap certainly. Yeah, the team
Yeah.
has to be pretty excited. I was so surprised that they were able to pull off the daily dividends so quickly because there were some hurdles in the way there. There no company has ever done more frequent dividends than monthly, and Strive heard strategy was going to twice a month dividends with Stretch, and there Matt Cole was just like, hold my beer, we're gonna move fast, and we're gonna get them to change the rules for us. So Fong Lee and Michael Saylor had talked about, there's regulations, there's limitations from NASDAQ that won't let us do more frequent dividends than twice a month. But were you surprised at how quickly this came together for Strive? And I guess the second part of that question, Halston, is Michael Saylor gonna follow the lead that Strive has set? Now that they're kind of locked into these semi-monthly dividends, if that gets approved later in June.
Yeah, I'll start by answering the first question. Definitely was surprised. I remember they were doing like a countdown to, an announcement that was going to change the world, and I totally thought it was going to be either an acquisition or maybe that they were going to become like the second largest public company holding Bitcoin or holding the most Bitcoin rather. And yeah, to see that, I was definitely surprised because it's like they've been looking up to Saylor and up to strategy for their playbook this whole time. And it's like it felt weird to like see them do something that strategy has yet to do successfully. I mean, it kind of, from what I've seen just with strategy's marketing recently, it kind of looks like maybe they're struggling to get those votes for the semi-monthly dividends. So I'm not sure. I think, this will definitely be the case where strategy might not really, I couldn't see them doing this immediately, but I could totally see them sitting back and watching how this goes for Strive. And then if it works for them, then they probably will do the same thing just because like we talked about earlier, like it really does compress the volatility. And so I think there's endless opportunity there with more capital flowing in for sure.
Yeah, I think you nailed it on the head. And Sailor's kind of alluded to the fact that they want to be conservative with the way that they move. And I totally understand it with a company of their size, waiting to see what happens with SATA's instrument. And obviously the team at Strategy is rooting on Strive, even though they're in some sense competitors. But I love that from the Bitcoin treasury community and the Bitcoin community at large. I think a lot of people are really rooting each other on, and it's cool to see that. When companies have success like this, yeah, a rising tide lifts all boats, right? So we should be cheerleading the success that all these companies are having. Um, yeah, Strive also kind of led the charge with having a U.S. dollar reserve to kind of increase their credit worthiness, to maybe credit rating agencies or investors, largely institutional investors, to say, hey, we've got a chunk of cash on our balance sheet to cover dividends. We might deploy it, but we want to give peace of mind to people who are bringing in capital into our equity. So, yeah, I think Strive, I think we're going to continue to see iterations from them. How important has it been for the team to retire all of that debt that they did recently? Do you think that was another kind of catalyst that they're just laser focused on? The only kind of
Oh,
amplification or leverage they have is SATA.
absolutely. I thought that was really important. I don't think, enough people were talking about that because I think that's actually something that strategy has been kind of trying to lean into as of late. I mean, we saw Saylor tweet that they just bought back some of their converts. And so, yeah, I think that's definitely important. And, it's really cool to see like And this is why I'm so bullish on Strive. They have no debt. They have 16,000 coins. They now are the first security ever to offer daily dividends, which they're stripping away all the volatility. So if that doesn't, and I was just listening to it was I think it was Jeff on Natalie's show, and he was talking about how the Nasdaq was like super in favor and pro of daily divs, and they I think had 10 or 15 different companies ringing the bell that morning, and they moved them to the front. And I was like, yeah, this is definitely going to get a lot of attention, because who doesn't want cash on the daily, right? So yeah, I think them paying off all the debt, it was definitely incredible to see. And I think strategy's definitely trying to maybe not, copy that play exactly, but I think that Saylor's made it pretty clear that, they want to focus on stretch and kind of retire some of the other things.
If you're trying to get to the top of BitcoinTreasuries.net, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide. Why? It offers regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the New York Stock Exchange and hold a federally chartered national bank license from the OCC. For treasury companies, it's a must call. This is the infrastructure layer that really matters. Learn more at bitgo.com. It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
Yeah, it makes a lot of sense. And yeah, it was really cool to see, Jeff say that about NASDAQ just being eager to allow this to happen and bringing them in and drawing attention to it. And yeah, they've got a great tagline now, the Daily Dividend Company. Who doesn't want divs on the daily? Certainly, I think you put it well. It's interesting, like the promise of like crypto largely was like, it's in some sense, other than Bitcoin, certainly as, the only coin that I'm really following, it's obviously a superior store of value, but the promise of the greater crypto, ecosystem was that, it's going to change finance. And there's certainly some ways that stable coins have kind of upgraded how US dollars can move. But it was so cool, I think, to see Strive, a Bitcoin company, be the one to say, hey, we're going to bring daily dividends here. And it's backed by a Bitcoin company. How bullish does that make you for the prospects of Bitcoin and Bitcoin treasuries generally, Halston?
Yeah, I mean, I think so bullish. I mean, I there's such a division, right, in the Bitcoin space when it comes to the suits and the cypherpunks and all of that. But I'm kind of someone who thinks, starting with the ETFs, like I do think that was a net positive for Bitcoin adoption. We as Bitcoiners, what we want is to see more of the world adopting Bitcoin, and we want to see the masses come into Bitcoin. And I think that these products definitely do that, and they definitely help the capital that can't really buy the spot Bitcoin. And I think that's something that a lot of cypherpunks and, the freedom maxis tend to forget, is that there is capital that's kind of just stagnant, and it's still a victim of broken money. And so I'm definitely very bullish on Strive and strategy, and starting to see these treasury companies help the capital really, benefit from hard money that actually does preserve your purchasing power and do incredible things. So, I can't say I'm a fan of every single treasury company right now, but I do think that in general, treasury companies are a net positive for Bitcoin and for Bitcoin adoption, for sure.
Totally. Yeah, and talking about the broken money, you're kind of in that Gen Z wheelhouse, right? And
Yeah.
classically, with Gen Z, there's a lot of, like, I guess, frustration towards the traditional financial system, and in ways that I think it's so hard to acquire assets and get and reach that prototypical American dream. I think every successive generation for the last several generations, probably since World War II, has had more and more of a problem, since the 50s and 60s. So what's your message to Gen Zers out there who are frustrated with the system, frustrated at trying to get ahead, and can Bitcoin be a solution to those problems?
Bitcoin is absolutely a solution to those problems. The first thing I'll say on that is, like, it's okay to be frustrated, but I don't think it's okay to kind of just give up. I mean, you can. Lots of people do it. But I think that you do need to strive to at least try. I mean, I'm taking a bet on Bitcoin. For all I know, Bitcoin could go to zero. I don't think that's possible, and I don't think that's going to happen, but I do think Bitcoin's a binary outcome here. We could actually talk about kind of how I got into Bitcoin, because it wasn't, too long ago. I was in college. I graduated last year, for some context. I'm 24 now, and at the time I was I think I was around 21. I was in my junior, like end of junior year in college, and I was working 3 jobs. I had an unpaid internship, I had a full-time job as a nanny, and then I also did like food service part-time, mostly for the tips. And I funded my private education on my own, and so that's kind of why I did that. But I was just really struggling. I was like, this is just, I get it that college is expensive, but I had a mix of student loans and like paying some out of pocket. Like, it just didn't feel like I was getting the most out of life, considering I had 3 jobs. And so I was a business economics major. I was minoring in marketing and finance, so taking lots of finance, accounting, econ courses. And I didn't feel like any of the courses really explained like why I was feeling like this. And it really wasn't until actually I read the book that's sitting behind you, Broken Money, really changed the way that I viewed everything I had learned about the economy up until that point. And I feel like that book really kind of validated everything I was feeling and experiencing. And it was at that point that I kind of started getting crypto curious, I'll say. I never thankfully bought any other cryptocurrencies, but I definitely was like reading about other things. And so, yeah, so then I, started going down this rabbit hole. Then I read like the Bitcoin Standard, a few other Bitcoin books, and that's kind of how I got into it. But the core, reason why I got into it was because I felt the pain of the broken financial system. And I did see how Bitcoin could provide that solution. And I'm still very confident, even though we're in a bear market, that it will be that solution. I mean, it already has been for me. Even just DCAing, like, has really changed my life since then. I've been doing it for 3 years now. And, I truly believe that if I keep at it, and any young person really keeps at it, you can't afford the American dream. I think the American dream is still very real. It's just going to take going on this new path to get there. And that new path consists of putting your money into hard assets like Bitcoin. And, I don't really invest in too many other things besides like Bitcoin adjacent things like MSTR and ASST. I'll do like call options here and there, but not really.
Full degen, Halston.
Yeah.
Love it. No,
Yeah.
that's a really, really cool story. And I think a cool message, for your generation, and for, people who, it is really easy to get frustrated. And, sometimes it is hard, no one wants to, work 90 hours a week and not have another life. I shouldn't say no one, because I've been there, done that for a little season in my life, but it does, wear on you. I think life should be hard, but it shouldn't be hard enough that you can't get ahead, right? Especially living in a country as wealthy as America. And I hope Bitcoin can be part of that solution.
And that's the thing too, is like, the moment for young people, the moment they believe that life is unaffordable, I think that's the moment depression and anxiety really start to kick in, because it's like, well, if you've been told your whole life that the point of life is to, I don't know, find someone you love, get married, start a family, buy a house, do all the things, and then that just feels completely out of reach. It's like, where does our society actually go? If there's no incentive to pursue that because you just don't think the outcome is going to be what you want, like, that just leads me to believe, like, that's a society that is in a steep decline. And so, yeah, I do think that, just, wrap that topic up, I do think that Bitcoin is the overarching solution to all of that.
Yeah, that's good perspective, Halston. So at Bitcoin Quant, you're tracking analytics and a lot of the stuff going on with Bitcoin treasury companies. So during this last, I would say, kind of explosion of companies going public with a Bitcoin treasury strategy, specifically one that's kind of leveraged through some pipe deals. Different bond structures, and of course we've got Strive and strategy with the amplification, preferred equity model. But all these companies traded at high premiums to their Bitcoin, a high MNAV. How do you view the next kind of like bull cycle playing out? I won't come back and call you out if you're wrong on this, but what lessons do you think treasury companies might have learned, investors might have learned from this last cycle? Because it's hard to imagine a world where MNAVs go to those sky high levels that we saw, because I think it makes sense for a lot of these companies to accretively add Bitcoin by hitting the ATM on their common stock. But I was listening to Lance Vitanza from TD Cowen today talk about, Bitcoin per share is everything. He's like, it's the key metric on how to properly, value these companies. That, a company that has, say one Bitcoin per share today, could end up, if it's well run, having 5 or 10 Bitcoin per share. That's just a, random example. But, how do you view the lessons that companies and investors can both learn in this upcoming cycle, when prices rebound?
Yeah, I mean, like I said earlier, I'm not a proponent of every single treasury company that's out there. I do think there's some that are maybe overlevered and haven't really done anything productive or valuable to the Bitcoin community recently. And so I do think that, this next cycle is going to be one where people are going to realize that you do have to kind of offer something productive. And what I mean by that is, like, you look at Strategy and Strive, and they've offered these different instruments that serve different investors and their different risk profiles. Whereas you have, and I'm not going to list out a specific treasury company, but say you have Treasury Company A, and they haven't really done anything except buy Bitcoin, and they're trading severely under a 1 MNAV. And so I just think that in the next cycle, we're going to see a lot more treasury companies, a lot more productive treasury companies come about. And I think the current ones are definitely going to have to step up and mature a little bit. I mean that, like, in the nicest way. It's just that, why shouldn't I just go buy Bitcoin then at that point? And so, I think, even with companies like 21 Capital, I haven't seen too many more announcements ever since the Vegas conference out of Mallers, but I am pretty bullish on them, mostly because I think they have a new kind of flywheel. They have the mining business that I believe they just merged with or acquired. And so that in and of itself is, like, very novel. It's going to be definitely very interesting to see. But see, that's something productive. You combine that with capital markets and their future capital market strategy, which Jack has talked about a few times on the pod, that they do plan to do. I'm pretty bullish on that. I'm a lot more bullish on that than I am just a stagnant treasury company that's not really offering any other instruments, not offering any products. And so, I think, to answer your question, I think I view the future of treasury companies. I think it's going to be different. It's not going to be, what we once saw, 6 months ago, 12 months ago, where treasury companies are just buying Bitcoin. I think this next cycle is going to force people to offer something more.
Yeah, how do you see that playing out, Halston? Do you think we're going to see a lot of mergers and acquisitions where, kind of these distressed companies that might not rebound with their MNAV get acquired by a larger company? Do you see them like just today there
Yeah.
was a company that sold off a lot of their stack and announced plans that they're discontinuing their Bitcoin strategy. So I'm sure some of them will sell it off at a loss, but yeah, how do you see that playing out?
Yeah, I mean, I definitely think there will be, I think, some acquisitions. Even the company I work at, we've talked about acquiring a few of them. And so, yeah, I think a lot of these smaller treasury companies that haven't been successful will unfortunately learn the hard way. And, I wish them the best. I don't wish for any of them to be unsuccessful, but yeah, I could totally see that happening. Even, I honestly thought that that's what Strive was going to announce, but I was wrong.
Yeah,
But
I
yeah,
did too. I thought maybe a merger was kind of in play, and I was pretty shocked by the daily dividends. I didn't have that
I
on my
was
radar
shocked.
just yet. Yeah. You mentioned strategy retiring some converts. They retired. I think it was 1.5 billion. Can you walk through that? Why it was accretive to strategy to retire this, and why do you think they did it so early? Those converts I think matured in 2029. If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a cold card for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The dip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market leading rates at every size. You can learn more at archlending.com.
Yeah, I think it was 2028, 2029. Yeah, I mean, this was extremely accretive because they essentially paid they paid 92 cents per dollar. And so I think they ended up saving about like $120 million. And so this ultimately increases Bitcoin per share. And I think Saylor has been very adamant on that. That's what his core day-to-day objective is to increase Bitcoin per share. And so, yeah, that was interesting to see. I think it made a lot of people upset, but I think it just made them upset because they didn't understand it at first. But yeah, they essentially got a 8% discount to face value. So, yeah, I think that was important for them to do that. I'll be interested to see what else they do. It sounds like they have, quite a few things cooking up. I'd be curious to see if they, end up selling some more, selling some coins, but I know he kind of teased that a little bit, and that also made people upset. But yeah,
Yeah, I know when they first announced they were stopping the convert strategy, getting that those 0% and low interest rate converts. I was a little sad because, like you, I've engaged in a few option strategies, and those were things that could really supercharge the balance sheet. And a lot of times we'd see it was pretty predictable how the price moved for a while on strategy around those converts, and I'll forever nostalgically, I think, talk about those days, at least with grain of salt. Him and I share a common bond there, but yeah, it totally makes sense for them to clean up that balance sheet, and like you said, I think it's an underrated play that Strive made, clearing their balance sheet, retiring all their debt, so that investors really can just see what's happening under the hood. There's no opaqueness. There's no funny business with people
Absolutely.
arbitraging the converts. What do you make of Saylor and Fong and the team at Strategy saying that they're willing to sell Bitcoin under the right circumstances, as you said, if it's accretive to Bitcoin per share? What's your take on that philosophy generally?
Yeah, I mean, I think that, I think a lot of the hate comes from sailors just saying like that he would never sell any coins. And so people are like, like, we got you. But I think ultimately, Sailor and the team at Strategy, they've been very clear in that they will only make decisions that are accretive. I really don't see the problem with selling some high cost basis coins. Like, if it makes sense to shareholders and to the company's success, like, I don't see why you wouldn't do that. It seems like um, the the wisest thing to do, in my opinion. So I don't see the problem with that. It's a tiny percentage compared to what they actually hold, and so yeah, I think like their average is like 75K, I think, per coin.
Hmm.
So but they do have a few high cost basis coins, and so I think it makes perfect sense. Um, yeah, and a lot of it too, I think, is Sailor is like a very underrated marketing expert. I think he knows social media like no one else I've ever seen. And mind you, like, I have a strong background in marketing. I did lots of marketing internships. I have a master's in marketing, and this guy knows what he's doing. And I think he intentionally will come out and say something quote unquote, outlandish to get people chatting. And like, what they say in school is like, bad PR, like all PR is good PR, even if it's bad PR. And so, yeah, I mean, I think the team knows what they're doing, and it's either you trust them or you don't. If you don't trust them, don't invest. It's that simple.
Yeah, yeah. Michael Saylor really is a character, and I think he's been so good for Bitcoin. He's orange pilled so many people, and it's funny. He's provocative, like you said, but also like straightforward and honest. And he knows how to bring out the bulls and how to bring out the
Yeah.
bears. And yeah, he definitely kills it on social media. And like he always says, volatility is vitality, right?
Yeah.
He wouldn't have been able to scale this company without the massive volatility on it. And I think he's just, pulled a lot of the right levers at the right time. And, if Bitcoin's price does what we think it does medium to long term, he's got a leveraged option on that, which is going to provide some real strong beta to Bitcoin. So
Yeah, and
yeah,
I think
what else?
oh, go ahead.
No, no, go for it.
I was just gonna say, I think they've been super honest and humble too when it comes to admitting, like, hey, if something's not working, like, take Stretch for example. They've realized like there's a lot of traders using this product, and so they want to go to semis. And I think the only thing really stopping them, I would say, from doing the daily is just I think they kind of just want to see how it goes for Strive. But I could totally see them, copying that strategy, because even if they went to semi-monthly divs, the underlying problem is still there. It's just going to happen, twice a month. And
Yeah.
so, yeah, I think, they've definitely been honest when something's not working, and, they've owned up to, their quote unquote mistakes. I wouldn't really categorize them as mistakes, but yeah, I mean, I think they're definitely a trustworthy team.
Yeah, and I think a leader who's willing to be able to change his mind and pivot, when the decision makes sense, is a sign of a capable and good leader. So yeah, I think Saylor has had a lot of success there, and
Yeah.
I think yeah, he's not prone to mistakes, and mistakes will happen, but I think the long term vision, the long term conviction, and the execution is going to be there. So yeah, super bullish on what they're doing. As we're recording here, I'm just taking a peek at the SATA tracker we've got over at the website, and they just clicked over we've got them estimated for 800 Bitcoin they've been able to purchase. Strive has from SATA just today.
Wow.
They broke their volume records now for four straight days this week. Obviously a weekly record, and yeah, I mean, this is pretty crazy.
That is pretty crazy. Yeah.
Yeah, I can't wait to see what the daily dividends are going to bring, and how maybe this brings some extra juice into strategy, um, right before the ex-dividend date, and it might be good for both companies, to be honest. What do you think about the DeFi projects that are collateralizing Stretch and SATA and digital credit broadly to basically, they're buying up these products and then packaging them up for a native, crypto audience who can, maybe leverage their Bitcoin if they want to, and get real yield on it.
Hmm.
Or maybe it's just someone who's got stable coins out there. Maybe they're kind of existing outside of the traditional banking rails and now have exposure to a product, that is, highly regulated and very transparent with how it generates yield. What do you think about that whole ecosystem in the bid they've brought to STRC and SATA?
Yeah, I think it's really interesting. It's something that I don't feel too knowledgeable on, but it's something that I've been kind of studying recently and actually writing a report on the L2s. But I think, yeah, I mean, I think if this works, then that's truly incredible. Even for TradFi, I think that we're going to see probably a lot of institutions white labeling these products like Stretch and SATA. I mean, I have a friend that's kind of already doing this with a company that I, can't say, but yeah, it's like, okay, banks are quietly paying attention. They're maybe not coming out and saying anything, but they're paying attention to this, and I think that this is definitely capturing a lot of Wall Street's attention. Because who doesn't want that kind of yield, right? You have your, the highest you could probably get in a heist is 5%. So yeah, I mean, it's interesting. I don't know where these go, but it's cool to see what Apex is doing, and yeah, I'll definitely stay tuned because I've been researching this and kind of looking into it. So I have a report on that coming out soon.
Yeah, we'll be really excited to follow up and read that report, Halston, and definitely shout you out and let us know when that drops. Yeah, yeah, so many crazy things happening in the Bitcoin treasury space. I too am like really bullish on that. Specifically, it's the most exciting, like I guess, broader crypto project that I've. I guess it's the one I've paid attention to the most. Because I kind of understand what Stretch is doing. So, what about other Bitcoin treasury companies? What's been interesting? You mentioned 21. Maybe we can get into that a little bit more. Yeah, Jack Mallers and Tether. Tether's kind of controls that company, and they're really trying to bring, I guess, the Bitcoin company, the Bitcoin conglomerate, if you will, that does native things on Bitcoin, like you said, mining. It looks like Strike is going to be folded into that company, and they do Bitcoin-backed lending and exchange operations. M&A can be really expensive and really risky, so. Do you think they can pull it off? I mean, like, I'm excited to
Yeah.
see financials once those come out, so we have a better understanding of what we're actually working there. But I'm certainly rooting on all these Bitcoin treasury companies.
Yeah, to speak on 21, I think I'm cautiously optimistic when it comes to 21. I think, I've always been a fan of Jack, and I think he's a good guy. He's someone that I really looked up to when I first started getting into Bitcoin and learning about just the financial landscape we're in. And so I'm bullish on him. I say I'm cautiously optimistic because, like you said, we haven't really seen the financials. He says Strike is profitable, but I just don't know where their company is actually at. I think when you have such powerful people like the guys at Tether, and then you have Jack, and then you have now this like mining business, it's hard not to be bullish on a company like that. I do think that they will pull it off, and I think it'll be, like you said, conglomerate is probably the best way to describe it. I'd call it maybe the Bitcoin, the super company, because they have mining, they have, Jack's mentioned the capital markets arm, and then he also has his the Strike business, and like you said, the lending. And so this is, definitely a prime example of what I mean by a productive treasury company. I don't even think he really calls his company a treasury company. I think he's calling it like just the best Bitcoin company there is. And I think that, it's definitely something he can pull off. And so, yeah, I mean, I'm pretty bullish on them. I want to see their financials pretty badly, and I want to hear more about the tech products that they're building, because he did mention that quite a bit. He mentions that on the pod, that they're building tech products, and so I'd be curious to know what that is. But it's like, yeah, you take a successful, profitable tech company that has, say, mining, and maybe they're building a cold storage device, or who knows what it is. And now you have revenue from that, and you're consistently adding to the Bitcoin treasury. And then you're going to offer instruments as a part of their capital markets strategy. Like, yeah, that's incredible. And I think that's, what strategy was trying to do, but I'm pretty sure their software business loses like 100 million a year. So can't say they're super successful in their software, but take a company that is, and like the possibilities just seem endless there.
Yeah, they most definitely do, and I'm looking forward to what they're doing. And it's inevitable, right, with the game theory of Bitcoin, that more highly profitable operations companies at least diversify into a Bitcoin treasury, whether or not it's a leverage play.
Yeah.
I think it's neither here nor there. But seeing what we have with STRC and SATA. Being so popular, like I said, I think stretches over $10.5 billion now. SATA's coming up on $1 billion, and will be really close, I think, after this week, as they've been able to hit the ATM on that product, that preferred equity. Do you think there's room for more digital credit in the U.S. markets and in the global markets on the whole? Metaplanet's mentioned that they want to do something like a preferred equity or some sort of digital credit. But how big is this market, and how much room is there for other companies, Halston?
Yeah, I mean, it's a big market. I think Saylor talks about all the time. It's a $300 trillion market. I can't speak for Metaplanet too much. I don't know what their regulatory environment looks like. That's a question I get asked all the time, is how come Smarter Web Company or Metaplanet hasn't done something similar? And I think it just comes down to maybe they just have a different regulatory environment. So I can't speak too much on them. But in terms of, the products and the opportunity in the US and North America, I definitely think there's always room. It's a huge market. And so even just, couple bips of that market, like, yeah, it would be incredible. And so I think Americans especially want something like that. There's a lot of, we talk about all the time how easy, quote unquote, the boomers have it. And while I do think that's true, a lot of boomers did have it really easy. I've also seen a lot of boomers struggle. I mean, I can speak to my direct family. My grandmother moved from Brazil to the US around age 30. She brought her 3 kids and really lived out the American dream, worked as a cardiac nurse for like over 30 years, ended up retiring and going back to Brazil just because the dollar is so strong over there. And so she did that, and then for a few years, and now she's coming back to the States. And I was just talking with her recently, and she's telling me that, retirement's not really cutting it, and she's actually going to go back to work. And so that, I think, really is just a clear indicator of where we're at in the economy. And I think that goes to show like the demand for better products, especially for the elderly. Like, I'm not going to convince my 70-something-year-old grandmother to go put 50% of her wealth into Bitcoin when it's just, it's been pretty volatile. And so, but I would totally convince her to put a good chunk of her wealth into a product like Stretch or SATA. And I think that's kind of, that leads me to my next point, to like, yes, there definitely is room, and we're struggling financially in the US from anywhere from my generation to my grandmother's generation. And I think these products are really good for that older generation with a shorter time horizon. For me, I'm 24 years old. Like, I really have no business buying straight up SATA and Stretch. Like, I'm just trying to put as much money as I can into MSTR, Bitcoin, and ESST. I'm pretty bullish on ESST. I think that it's severely mispriced right now. And so, yeah, I definitely think there's room for more products in the US. I know Metaplanet has talked about, offering instruments like strategies, but we just haven't really heard too much from them. So, yeah, I mean, I guess we'll stay tuned and see what they end up doing.
Yeah. Yeah, it'll be interesting to see. I've heard the same thing of kind of some regulatory hurdles that they need to knock out. But if anyone can figure it out, that team also is really capable. And the Japanese market certainly is like, really starved for yield. That's kind of unwinding a little bit. But certainly, I think that market makes a ton of sense for a Bitcoin-backed product. And you mentioned earlier you're looking forward to banks white labeling this product too. I think that's just going to be more exposure to Bitcoin, and I think it's something that is inevitable, the longer stretches out there and the longer it can trade close to par, and raise capital. Some banks right now might not touch it just because it's only $10 billion, which sounds like a lot, but to a bank, for a new product, they probably want to see. They want to see orders of magnitude bigger sometimes. So yeah, it'll be interesting. Like you said, Smarter Web, I think is really trying to ratchet up, hit it kind of a scale so that they can launch a product like that. They were talking about that on this podcast once. Andrew Webley and Jesse Myers and Alex Lazay from Capital B has mentioned that their company is laser focused on scaling up as quickly as possible to deliver that same type of Bitcoin backed yield to European markets. So it'll be interesting to see who gets there next. I think there's plenty of room, in the U.S. markets too for some more players because we've seen the success of SATA, with their hundreds of millions traded just this week. So I think there's certainly room for more of that. Whether or not teams can execute is the next question. But really excited to see that. I agree with you. It's like Stretch isn't the product for me, but it's one heck of an orange pill to sell to people who need kind of something low volatility and kind of in a fixed income sphere. So for anyone, who wants to dip their toe into Bitcoin, it's a great way to, for the quote unquote normie to get some exposure. So we're coming against our time here, Halston. I'll give the floor to you. Tell everyone where they can find out what you've been building and working on, dig into that, and where can we follow you online?
Yeah, I'm predominantly on X, LinkedIn a little bit, but it's just at Halston Valencia on both of those platforms. I've been working at Bitcoin Well for 10 months now, and I do a little bit of a mix of marketing and capital market stuff. So it's been really fun there. That's my day job, and then at night I come home and try to work on Bitcoin Quant as much as I can. I also have a newsletter called the Weekly Bolt. That's kind of a separate initiative, but the objective with that newsletter was kind of to help my friends and family understand the macro and geo landscape we're in. And so it's essentially a macroeconomic / geopolitical newsletter that is written with a Bitcoin worldview and Bitcoin lens. So definitely check it out. It's completely free. I just do it because it's something I'm passionate about. And same thing with Quant, definitely just something I'm passionate about. So definitely check those sites out. But follow me on Twitter. That's where I'm the most active.
Awesome stuff. And Halston is a great follow. Everybody, make sure you're following along. We'll drop all those links and her handle in the show notes. Thank you for joining us today, Halston Valencia, the BitcoinTreasuries.net podcast. And one thing I have all my guests say before they leave is stay orange.
Stay orange. I like that.
Right on. Ladies and gentlemen, Halston Valencia.